Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
All right. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And friends, you're in the right place if you have questions about real estate, about mortgages, about interest rates, about the Federal Reserve. What is going on in the housing market? Is it a good time to buy? Is it a good time to sell? Each week, right here on this station, at this very time, we come to you live. We dig into the data. We go way past the headlines into the real data so we can give you the information that you need so you can go out there and make better real estate and mortgage decisions for you and your family. And that is something that we can all be thankful for because, man, the headlines are just crazy, right? It's still so super scary if you just read the headlines. And we don't read the headlines. Well, we read the headlines, but then we read the data in the article. And then most of the time we uncover that the headline is at very least misleading, sometimes 100% contradictory to the data set in the article. But we do this each week. It is our goal to give you that data and answer all of your questions. If you have questions, you can call or text the Anytime Hotline, which is 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. You can call or text that number. And Jen, my producer extraordinaire, is womanning the Anytime Hotline, and she'll get your questions on the air. So, hey, Jen, you got a big old smile on your face. How are you today?
Happy weekend.
Happy weekend, everybody. Yeah, we're super excited to be with you. So this week was an interesting week, a short week in a lot of markets. And, I hope everybody had an amazing Thanksgiving. I know I did. I'm carting around a few extra pounds, and thank goodness there was an extra notch in my belt because I'm using it today. But friends, hopefully you had an amazing Thanksgiving holiday and you were able to spend it with those that you love. And we're excited, always excited this time of the year because we've got a lot to be grateful for. And having the opportunity to come to you each week is one of those things. We definitely enjoy our time on the air with you. But again, short week this week, but there was some interesting data released on Wednesday that really carried the market through the remainder of the week through the holiday. The Federal Reserve minutes, as they dissected the minutes, kind of indicate that there might be some slowing in the rate hikes. And what I mean by that, a lot of the comments made by the Fed officials this week indicate that December's rate hike may only be 0.5%, 50 basis points, instead of what's become customary. The last several hikes have been 0.75 of a point or 75 basis point hikes. And the reason that's encouraging is a lot of people are starting to feel like the Fed's getting a handle on inflation and these rate hikes might come to an end sooner rather than later. Now, I'm not 100% convinced of that, and I'm going to tell you why. Anything we can do to slow the hikes, I think, is great because if you carry a credit card balance, that interest rate is going up. If you have a home equity line of credit, that interest rate is going up every time the Fed moves the overnight rate or the Federal Reserve rate. So also, too, a lot of large corporations run on adjustable debt. They'll have a sweep account or a large credit line that they're operating their business on, and those rates are directly affected by the Federal Reserve. So as the interest rates continue to go up in those arenas, everything that we do costs more money. So we're all rooting for this to be over sooner rather than later. And I know coming out of the October into November, the data indicated that the October Consumer Price Index was 7.7% over a year ago. So still a big increase, but a lower increase than we've had over the last couple of reporting cycles. So that was encouraging to a lot of economists. But one data set that the Federal Reserve pays closer attention to is the Personal Consumption Expenditure Price Index. I know that's a mouthful. That showed a 5.1% annual rise in September. So that's up 0.2 percentage points from August, and that was the highest increase since March. So I'm not convinced that we've battled this inflation monster to its death yet. And I know until we do, the Federal Reserve is likely to continue rate hikes, and hikes of any nature are going to increase our overall cost of living. So I'm cautiously optimistic that we'll see some slowing, but smaller rate hikes extended for a long period of time, I don't know if I like that any better than, a few more big rate hikes and getting it over with. But, that's for the market to decide where we go from here. I'm still convinced that the Federal Reserve does not have a handle on the inflation monster, if you will, as of yet, because they indicated that the tightening has not been sufficiently restrictive. And that language scares me because it's left open to interpretation at what point we become sufficiently restrictive. And they're looking back. They're trying to look back at each report, which at very least is 1 month data behind us. So there's some fear in the market that the correction may come and go before the Fed notices it, and they overcorrect. And you've heard me say it if you've listened to the show for any amount of time. Overcorrection sometimes is more dangerous than not correcting at all. And I told a story on the air a while back, and if you'd like to hear it in its entirety, go to MrMortgageRadio.com and click on the link that is the radio show archive. But I told a story where my father taught me to drive on a dusty Florida dirt road out in the farmland. And my dad was the quintessential Florida man, if you will. So he's teaching me to drive in this old 1971 F100 powder blue with the 3-speed shifter on the column. And he's got a Doral cigarette hanging out of his mouth and a Budweiser between his legs. And I'm driving this pickup truck on these dusty roads. And I take a right-hand turn. I'll never forget this. And when I did, it was, the old trucks didn't have power steering. So I swing the wheel back around. Well, the truck starts to fishtail a little bit. And as a 12-year-old kid learning to drive out in the dirt roads, I'm overcorrecting. So I'm whipping the wheel back to the left and to the right and to the left and to the right. And the truck's just fishtailing along. And my dad reaches over and grabs the steering wheel and tells me to stop. And I'm scared to death that I've done it now. Here it comes. I'm in trouble. Well, I look over and the ash had not been knocked off the end of that Doral cigarette, and he hadn't spilled his beer. So I knew that I stood a good chance of getting out of this without, being in trouble. But I was scared. I'd never driven before. But he shared with me at that point, he said, "Son, you're overcorrecting." And overcorrecting can be as dangerous as not correcting at all. And that's what I think of when I watch all of this economic back and forth, if you will, around the Federal Reserve, that a lot of people are afraid that he's going to overcorrect. And I don't envy him. I'm a little concerned that they were so slow to react to inflation in the beginning. So there is a chance that they're going to react a little too severely and a little too long. But that's why they get paid the big bucks, because they're a lot smarter than all of us. Interesting that there might be some cooling in the rate hikes. The good news is interest rates have pulled back since their all-time highs. And, almost all loan programs are somewhere between the 5s and 6s at the moment. And that seems to be encouraging a lot of people to get off the fence and go out there and take a shot at becoming a homeowner again. So, hey guys, you hear the music, you know what that means. That's my cue. We're going to run into a quick break. On the other side of this break, we'll be back with more of the show. We're going to dig into some more of the data, and we're going to get to your questions. And you can call or text your questions to 855-462-7292. If you want to get on the air, call now and we'll get you in line. Sit tight. We'll be right back. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. I want to tell you a quick story of a client of mine in Port St. Lucie, Mr. D. Awesome guy. Did everything right. Worked hard, provided well for he and his family, had a nice chunk of equity, was retired and living comfortably on his fixed income. That was until all of this crazy inflation. Gas prices, grocery prices, medical bills. Every time he turned around, he was getting hit with another unforeseen expense. The good news is he has a ton of equity, so we helped him with a reverse mortgage. He was able to take a nice chunk of money at closing and has access to additional equity through a credit line. And the best part, never another monthly mortgage payment. Now listen, a reverse mortgage is not for everyone, but for the right person, it can be life-changing. If you'd like to learn more, tune in Thursdays at 11 o'clock for the Mr. Mortgage Show right here on WPSL. We're the Clay and Buck warm-up show every Thursday at 11 a.m. right here on WPSL. Or find us online at MrMortgageRadio.com. That's MrMortgageRadio.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are tuned into the Mr. Mortgage Show. And guys, we appreciate you spending a little bit of your day with us. We do this each week right here, same time, same station. And as always, it's our goal to give you the information, the data, the real stuff, not the headlines, not all that scary stuff, but the real data so you can go out there and make better real estate and mortgage decisions for you and your family. So we are excited to be with you. You heard me before the break talking about the Federal Reserve and the likelihood that they may slow the rate hikes back to 0.5 point instead of 0.75 of a point. Are we going to slow the interval? And I mentioned there's contradictory data sets around that, so we're not sure. We're cautiously optimistic, but we're watching everything closely. So if you missed that and you want to hear that portion of the show, just visit MrMortgageRadio.com. We put everything up there. You're going to find a series of links to the data sets, which are on the Facebook page, to the archive of all of the previous radio shows. That's, I think there's 90, 91, 92 episodes up there. So yeah, we've been doing it for a while. So check out MrMortgageRadio.com. But you heard the announcer bringing us back from that break. If you have questions or comments, you can call or text 855-462-7292. That's 855-462-7292, affectionately known as the Anytime Hotline. And Jen, my producer, is womanning that hotline, as well as running the board and watching for emails, and she'll get your questions on the air for you. But let's throw it over to Jen for the first question. Do we have? Okay, yeah, let's go. What do we have?
Tanya just emailed us. What is the downside of a VA loan? I've heard sellers won't accept a VA offer. My husband served 6 years, and we'd like to use his eligibility.
Hey, Tanya, thank you for that question. Thank your husband for his service, and thank you for allowing him to serve, because I know being a military spouse is not an easy thing, but we do appreciate you and your family and what you do for our country. But let me jump in and answer this question, because this one's close to my heart. We are big supporters of the veteran community. We're members of the local legions all over the place. We're all veteran lending specialists. My entire company has gone through that process, or at least my team. I guess I need to be more specific. So yeah, it really, really maddens me to hear when someone says that the VA loan is difficult, or, it's a problem for the seller. That drives me crazy. And if you don't have an agent that's willing to advocate for you as a veteran, give us a call. We promote reallyGreatAgents.com. You hear it during the show. We run spots for it. reallyGreatAgents.com. Just let us know the area in which you're looking, and we'll send you a list of agents so you can contact them at your convenience. It's not like one of those forms you fill out on the internet and then, my God, your phone blows up. Hey, that's a fun fact. If anybody's lonely out there and you want to talk to somebody during these holiday times, just go online and fill out one of those forms for real estate or mortgage information that you see on Facebook. My God, your phone's going to blow up. But yeah, reallyGreatAgents.com will send you a list of agents in your area, and you can contact them at your convenience. But back to your question. So there's really not a downside. The VA loan historically has been misunderstood. People think the appraisal's difficult. People think the quote unquote inspection of the property is difficult. Unless the appraiser calls out damages in the property, you're going to be fine. And by damage, I mean chipping paint, exposed wires, cracked or broken windows, leaky roof. One of the things is any staircase having, I think it's 3 or more steps, requires a handrail. And people will take the handrail off, the back stoop, if you will. It needs a handrail. If you walk through the property and none of that jumps out at you, then there's a very good chance that that's not a problem. And fun fact, back to the appraisal thing, interestingly enough, there were some statistics released earlier this year that showed during the pandemic, when everything was going crazy and people were missing the appraised value, the appraisals were coming in low because things were appreciating so quickly, the VA appraisal hit the target number more than the conventional appraisal. So fun fact there, as far as I'm concerned, as long as you're approved for the loan, the seller should have no concern whether it's a VA, an FHA, a USDA, a jumbo, a conventional. And my point is, if the buyer is approved, you've agreed upon a price, you should be good to go. And I guess the approval component of that's probably the most important part. Assuming that you've got a solid approval, in the seller's mind, you should be as good as cash, assuming the property appraises and there are no safety issues that are going to be called out. And I guess we could talk about that for a minute. The pre-qualification versus pre-approval versus AUS approval, and the difference, and I guess the importance in understanding the difference. So in the old days, and by the old days, I mean going back to when I started in the business in the late 90s, people just got pre-qualified. And a pre-qualification is pretty simple. A pre-qualification involves you calling the bank or the mortgage company or someone like me and saying, hey, I make, $80,000 a year. My credit score is, 695, and I've got a $300 car payment, no credit cards. And the person on the other end of the phone will do some quick math and say, assuming all of this is true, you're qualified for a mortgage of X, whatever it is. Let's just say $400,000 for argument's sake. Well, with a pre-approval, what will have happened is you will have completed the application and provided bank statements, pay stubs, if you're self-employed, tax returns, depending on whatever documentation is necessary for that loan program, you would have provided that information. And the loan officer or mortgage broker or bank representative would have gone through it and verified that everything meets that original conversation. 80,000, one car payment and credit score. Okay, they're good to go. They're pre-approved. They've done the verifications and they know that, mathematically your income supports this debt. Off you go, you're pre-approved. Now, that's awesome. There's one step even beyond that. It's called AUS approval. AUS stands for Automated Underwriting System. And that's where you get a DU or LP approval, which is basically just Fannie Mae or Freddie Mac. So what happens in that process is your credit's pulled in the approval process also, but now your credit is pulled, reviewed, submitted with all of your assets, with your income documentation, and you're run through that underwriting engine, right? That automated underwriting system, AUS. And assuming that everything meets the guidelines, AUS spits out an approval, and you essentially are as good as cash at that point. So that is the gold standard in approval, and you can do that with a VA loan, an FHA loan, any of the loan products that are out there. So hopefully that helps. I would encourage you to take a swing. You certainly earned the right, or your husband's earned the right to use that VA loan. And we hate to hear that anybody is discriminated against who's trying to use a government loan program. But anyway, guys, you hear the music. You know what that means? That's my cue. We're going to run into a break. On the other side of this break, we'll be back with more of the show. Sit tight. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And guys, Jen and I are here every week right here, same time, same station, and we are super, super glad that you're spending some of your day with us. As always, your questions are my favorite part of the show, and we had a great question during that last segment about VA loans and why they are so misunderstood. And guys, they're a rock-solid loan program. I guess one other thing let me throw out there that's often misconstrued about that loan is because it's a 100% loan product, a lot of people assume that the seller, or assume that the buyer, the veteran in this case, doesn't have any money. That's not the case, guys. I did a VA loan last year for a borrower that purchased a $1.5 million property, and this guy could have paid cash for it. But we did a 100% VA loan because he got a great interest rate. He had to put no money down, and there's no mortgage insurance. And more importantly than anything else, he's entitled to it. It's called an entitlement for a reason. So oftentimes, because the vet's not putting up a big down payment, sometimes the real estate agents assume that this is a shaky borrower, and guys, it couldn't be further from the truth. And I told you that trick going into the break about using that AUS approval, taking that extra step and getting fully approved so that you're essentially as good as cash in the seller's eyes as long as the property appraises and there's no safety issue. So, hey, that was a great question. That was a great segment. So if you missed that, you can catch it at MrMortgageRadio.com. Jen will post the recorded version of the show. But we're going to get to more of your questions. If you have questions, you can call or text 855-462-7292. That's 855-462-7292. Jen will get your question on the air for you. And speaking of Jen and questions, hey, Jen, what do we have?
Kimberly called in asking, I found a great house for sale, and they have an assumable mortgage at 3.25%. I'm excited, but have no idea what to do next. How do we assume this loan? Can you help? It's an FHA loan. Thanks. I love your show.
Woohoo! Awesome job. What an opportunity that you found. And hey, I heard that you love the show, so thank you so much for that too. But hey, what an amazing opportunity. And I do think moving into this market that we're in, you're going to see more opportunities to assume mortgages in the 2s and 3s, which is super exciting. So brilliant find. First of all, congratulations, because you hear me say it all the time. There's opportunity in every market, and this proves it. So congrats. And then to answer your question, so the servicer is the company that the current owner is making the payments to, okay? So lenders lend money, servicers collect payments. So the servicer is who you want to contact. So as much as I would love to be the guy to do this for you, there's no quote unquote origination because the loan has already been originated. It's already on the books. It's in existence, and you're assuming it exactly like it is. The loan balance and the loan term and the interest rate. So because of that, you need to contact the owner's servicer, and they'll start the process for you. And it's not a difficult process, but it does take time because servicers aren't built to originate loans. They're built to service loans. So the process does take a bit of time. I encourage everybody to plan for 45 to 90 days, which is not uncommon for an assumption, which is super contrary to a purchase mortgage closing, a new mortgage, because we're closing loans in, 14 to 30 days, all day, every day. But with the assumption it's a completely different animal. So you're going to contact the servicer. And the one thing I want to prepare you for is because you're assuming that loan exactly as it is, if that loan principal balance is, let's say it's $300,000 and you're purchasing the property for $350,000, you need to be prepared to cover that difference. So it was an FHA loan, which means that they would have been required to put at least 3.5% down, right? So a lot of it, people go into that FHA loan only putting 3.5% down. Just because you're assuming that FHA loan doesn't mean you're only going to have to come up with 3.5%. You're assuming that loan exactly as it exists now on the books of the servicer. So you need to be able to bridge that gap between the sales price and the principal balance of the current loan. So brilliant find. Congratulations. If you need help or you want to deep dive it or you contact the servicer and you're left scratching your head, give us a call, 855-462-7292, or shoot me an email. You can go to Mr. Mortgage Radio, and there's a link to the website. And on the website, there's a contact us box, and we'll help you through the process. But that's where you're going to want to start. But thank you so much for that question. And again, congrats on finding that opportunity. So, hey, Jen, do we have any? Okay, what do we have?
Here's a text from Rich. I'm ready to move, but I hesitate to sell my house before I find a new house. I'm thinking I will do a bridge loan for the down payment on a new house and then sell this house. Is there a better way to do this?
Hey, Rich, brilliant question again, and thank you so much for that. So there may be a better way, but let me first say that a lot of people do exactly what you're thinking. They'll either take what's known as a bridge loan, exactly as you mentioned, which is a short-term loan that the bank is giving you against the equity in your current home. It acts like a second mortgage, but you've got to get your new loan in place between 6 and 12 months, depending on who's the bridge lender. And then the bridge lender is going to want to be the lender of the mortgage on your purchase. So go into it knowing that. The other way people do it is they'll take an equity line on their current home to use for the down payment. Now, either one of those will work, assuming that your income will support all three mortgages: the first mortgage on your current house, the bridge loan or equity line on your current house, and the mortgage on the new purchase. So assuming your income will carry all of that, you're good to go, and that'll work. And a lot of people like to do that because they don't want to put their foot on that out over that lily pad until there's another one to step on, because what happened in the pandemic, things were moving so quick, you could end up homeless for a short period of time. So I get where you're coming from. Now, here's something to consider, and this is not uncommon. We still see it oftentimes. I mean, I'm seeing it in 1 in 3 contracts in my personal practice. you can sell your property and request post-closing occupancy, which basically means you're leasing the property back. So you can sell your house, cash your equity check, put it in your bank account, and go out there and buy and find and buy the new house. Now, here's one caveat in that strategy. If the buyer is purchasing your home as their primary residence, that post-closing occupancy term cannot be longer than 60 days. So we always encourage the agents to write it for 59 days, because as soon as it exceeds 2 months, it's now an investment property. And then the buyer will have to put more money down. It's a higher interest rate. So as long as you can make your move within those, 60 days, which is not difficult to do, especially if you've already scouted for the new property, post-closing occupancy might be an option you want to consider. And again, if you need help with that, check out reallyGreatAgents.com. I can put you in touch with an agent that can help you with that process, and they can list your property for you with that disclaimer that you're going to be seeking post-closing occupancy. But brilliant strategy. And we can help you too with the bridge or the mortgage if you want to go that route. But thank you so very much for that question. That was a good one. A lot of people are in that same boat. They want to move, but they want to find that house first. And I get it, right? Things are still moving quickly out there despite what the headlines are saying. So, hey guys, you hear the music? You know what that means. We're going to jump into a short break. And on the other side of this break, we'll be back with more of your questions and more of the show. Sit tight.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Let me tell you a little story about a man named Jed. Well, actually, this is a story about Mary, not Jed. Mary is an awesome single mom who's been raising her daughter in the same one-bedroom apartment for the last 11 years. That's right, one bedroom. They've got bunk beds in there and they've made the best of it. Her daughter's now a teenager, getting ready to start high school. The bedroom is a challenge, but more importantly, sharing that one bath is getting tough. So she decided to take the plunge and become a homeowner. We got her approved with an FHA loan. That's right, I said it, FHA loan. If your agent's telling you that FHA or VA loans are not being accepted right now, you're talking to the wrong agent. Give me a call and I'll get you in touch with a really great agent. Back to the story. She took the plunge and she is now the proud homeowner. They each have their own bedroom and more importantly, their own bathroom. Super excited for Mary and her daughter. If you want to learn more, listen every Thursday at 11 a.m. right here on WPSL to the Mr. Mortgage Show. Thursdays at 11, just before Clay and Buck. Check us out online at MrMortgageRadio.com. That's MrMortgageRadio.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are tuned in to your very favorite real estate and mortgage show. At least it's my favorite. Guys, I hope it becoming your favorite too, because we certainly enjoy being with you each week. And hopefully everybody had an amazing Thanksgiving. I know we're super thankful to be with you. And hey, you heard the man. You can call or text your questions to 855-462-7292. That is 855-462-7292. Jen, my producer, is womanning that anytime hotline, and she'll get your questions on the air. And guys, you hear me say it all the time. Your questions are my favorite part of the show. So let's throw it over to Jen for another question.
Brandy sent this email. Are there any grant programs or other options for a first-time buyer that you recommend? I have good credit and make decent money, but not much savings.
Uh-oh, Jen, was that Brandy? You know I'm gonna do it.
Oh no, Mark.
Here it comes. Brandy, you're a fine girl. What a good wife you would be. Sorry, but thank you for indulging me. Jen's been with me long enough to know that if somebody named Brandy calls in, I've got to serenade you. There's a few triggers. I think in pictures, and I'm a music head, so yeah, that always flashes me back. Oh, wait, yeah, I did it right. I was thinking Mandy. Sorry about that. But hey, to your question, Brandy, that's a great one. Yeah, so here's the thing. We just launched a new loan program that's a 100% purchase mortgage for first-time buyers. And here's the cool thing. A lot of grants require, like in Florida, there's the Hometown Heroes loan, right? So if you're a first responder, a medical professional, you can qualify for that program. And that loan program will get you to 100%. Awesome program, but it's for specific employment categories. Well, here's the cool thing. This new 100% FHA loan program is for any first-time home buyer. You can be a self-employed carpenter. You can own a restaurant. You can be the manager at the store in the mall. So regardless of your employment category, you have access to this program. And it's super cool because it's an FHA loan, so it's a 96.5% loan. And then there's a 3.5% grant that lays on top of it to get you to 100%. And the seller can contribute up to 6% of the purchase price to help you with your closing costs. So you can get into the deal for very, very little money out of pocket. And your parents can gift you the money that you need to close. So I mean, there's a way to walk into this thing with zero money out of your pocket. Now, you need a 620 or higher credit score, and you need to meet the FHA guidelines. But here's the really, really cool part about it. That grant, that 3.5%, does not require a payment, nor does it accrue interest. So that's really, really unique for this loan, for any type of grant program or that type of down payment assistance. So super cool loan program. If for some reason that doesn't work, just jump into Google and type in DPA, which stands for down payment assistance, and then your local county, because the counties are the ones that facilitate the federal monies that are allocated each year for down payment assistance. But I certainly would encourage you to check out this new 100% first-time buyer program. And guys, if you're listening and you've got any confusion around that, in the world of mortgages, a first-time buyer is someone who hasn't owned real estate in the last 3 years. So if you owned a property 4 or 5 years ago, sold it, and you've been renting ever since, guys, you're a first-time buyer. As long as you haven't owned real estate in the last 36 months, you are classed for mortgage purposes as a first-time buyer, and these programs are available to you. So super exciting program. And yeah, thank you for letting me sing to you. Jen is still over there shaking her head in disgust. She's not shaking her head because she's enjoying the melody. But hey, speaking of Jen, let's throw it over to her for another question. What do we have, Jen?
Monica texts this one. I've been listening to your show for a few months and heard you talk about the landlord loan a while ago. I'm not sure, but did you say this is an interest-only loan?
Hey, Monica, thank you for that. First, thank you for listening for a couple months. So you're either enjoying it or you're a glutton for punishment. Yeah, brilliant catch on that landlord loan. And if you haven't heard us talk about the landlord loan before, guys, it's an amazing loan product for investors who want to buy a property but may or may not have the personal income to support that new debt. So the landlord loan allows you to take the income from the property you're buying or potential income, so if it's currently vacant. And it works for Airbnb properties too, which is super cool. But how it works is as long as the income from the rental property will support the mortgage payment, including principal, interest, taxes, and insurance, a 1-to-1 ratio, it's fundable. That's the landlord loan. If you add the interest-only component, that debt service coverage ratio needs to be 1.15 or greater, meaning if your mortgage payment, including all that stuff, is $1,000, you'll need to collect $1,150 in rent to make that work. And how it's structured is it's a 40-year loan. The first 10 years are interest only, and then it becomes a 30-year amortized mortgage after 10 years. So it gives you a great opportunity to maximize cash flow on the front end of the loan, and you can sell it. 3, 4, 5 years in, sell it and buy another property, refinance it, pull cash out and buy another property. So it really gives you a lot of options and greatly reduces the monthly payment at the beginning of the loan. So good catch. Yep, there is an interest-only component to that loan product. So appreciate that question. Hey, Jen, do we have time for another one?
Lenny called this in. Is there a maximum number of properties I can buy with the landlord loan? And what's the down payment?
Hey, Lenny, that's another great question to carry on the topic of landlord loan. This is really exciting. So there are certain lenders that will allow you to have up to 30, which is mind-blowing to me because in the old days, it was 10 and then they bumped it to 15 and that felt generous. But yeah, up to 30 properties. And the landlord loan requires a 20% down payment. It used to be 15. It's now 20 because as the market is shifting and tightening a little bit, the lenders are being a little more conservative, but it's still an amazing loan product because all you're disclosing is credit and assets. So I hope that helps. Hey, Jen, do we have time for another question?
Bert called asking, the reverse mortgage makes sense to me. I've called your office and got the packet. Thank you. It really helped. But I do have one more question. I'm 68 and my wife is 61. So we need to wait until she's 62 so she's protected too. Is that correct?
Hey, Bert, that is an amazing question. And guys, we are seeing quite a big uptick in our reverse mortgage practice for the simple reason that fixed income seniors are really struggling in this economy with all this inflation and the increase in cost of living. And I know the government has just announced there's going to be a big increase. I think it's 8 or 9% for Social Security next year. But guys, there's a lot of fixed income seniors that are just barely treading water. And all that means is they're going to be treading water in a deeper pool next year. But hey, great question. And no, you don't have to wait. So there is a classification that your spouse, husband or wife, depending on which one is older, does not have to meet that 62-year age threshold. They're considered an eligible non-borrowing spouse. So they get the full protection. They stay in the property until their death. If you die first, they can stay there, indefinitely until their death, and then the estate will have to settle up the mortgage. But she is fully protected now if you close, and she uses that eligible non-borrowing spouse category. We do it all the time. It's not uncommon. I know you've already contacted the office and you got the packet, so I'm looking forward to continuing the conversation. And guys, if you're out there and you're considering a reverse mortgage and you've got more questions, call us or check out more about reverse.com. It's a big part of our practice, and we're seeing more and more demand for it now just because the economy is just, slapping a lot of us around, and the fixed income senior is definitely taking the brunt of it. But hey, brilliant question. I appreciate it. Uh-oh, I hear the music. That means we don't have time for another question. That means we've reached the end of another Mr. Mortgage Show. Guys, thank you so much for spending a little bit of your day with us. If you found any of this valuable, insightful, you think it'll help somebody, please, please, please share the show. MrMortgageRadio.com. MrMortgageRadio.com has all of our information. If you've got any friends or family or coworkers that are thinking of buying or selling real estate, I'm hoping I can count on you to introduce them to us. So guys, have a fantastic week. We will be back next week, same time, same station.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages, right here on The Mr. Mortgage Show.
Hey, it's Mark Eitel, host of The Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction, and that starts with a really great agent. If you've got a great agent, that's awesome, but if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.